Here we're going to go through an example to determine the type of lease based on lease testing criteria here. And we're going to be looking at it from the lessee's perspective here. And it's either going to be recorded as a capital lease here or as an operating lease. And the test criteria that we're going to go through here would be the 4 test criteria that you would use for determining if it's a capital lease here or as an operating lease. So first, the lessee, to record it as a capital lease, the lease must be non-cancelable and it must meet one or more of the 4 criteria that we're going to look at here. Otherwise, it would be classified as an operating lease. So looking at our lessee's test criteria here, first criteria, is there a transfer of ownership with this lease here? Second criteria, is there a bargain purchase option? And then thirdly, is the lease term greater than 75% of the economic value? And then number 4 here, test would be, is the present value of the minimum lease payments greater than or equal to 90% of the fair value of the leased asset here. Now, if we can answer yes to any one of these criteria here, any one or more of the criteria, it would be classified as a capital lease. And if the answer comes up no for each one of these test criteria, it would be classified here as an operating lease. So first, going over to our lease arrangement that we'd have here, and I'm only going to touch on the items that affect this example. So we have a yearly rental rate here of $12,000 per year, and then the lease term here is for 20 years, and then the estimated economic life here of the leased asset is 30 years. And then we don't have any purchase option or bargain purchase option, so there's none in this example here. And then the fair market value of the leased asset here at the lease start date is $120,000, and then the cost of the asset to the lessor here is $120,000. So the fair market value here, 120,000 equals the cost here of 120,000. And then next would be the incremental borrowing rate here for the lessee, and that's 12% here. And then we're going to determine the present value of the minimum lease payments using that incremental rate here. We're going to determine it to be $100,389. So now let's go up and do our testing here. So first we're going to look at the transfer of ownership here. Well, it's given in this example here that the lease does not transfer any ownership here. So, and then secondly, well, I failed that test, so we go on to our next test here, the bargain purchase option. And we were given here again that there is no bargain purchase option here, so it would have failed that test here. So we go on to our next test here, the lease term greater than 75% of the economic life. So let's go look at how we test that here. So we have an economic life test here. So is the lease term greater than 75% of the economic life? So the lease term in this case was 20 years, economic life here 30 years, so you divide the 30 years here into the 20 years and you get 66.6% here for the economic life test. So it's less than the 75%. So it failed the test here. It had to be the lease term would have to be greater than 75% here of the economic life. So again, we failed this test here, so we would have to move on to our next test, and that's the present value of those minimum lease payments. Are they greater than or equal to 90% here of the fair market value? So the first thing we have, let's go and calculate the present value of those minimum lease payments. So we have the 12% incremental borrowing rate here, and we have 20 years here on the lease. Payments are $12,000. So we discount those back here using the incremental borrowing rate of 12% and then the 20-year lease here. And discounting them back, the present value of those minimum lease payments are $100,389. So the next thing we have to do is we have to compare it to this 90% hurdle rate here of the fair market value. So our fair market value here of the leased asset at the beginning of the lease was $120,000. Our test rate being 90% here, so 90% of the $120,000 gives us $108,000 here. That would be 90% here of the fair market value of that leased asset. Now we would compare that to the present value of those minimum lease payments here of $100,389. And that is our recovery of our investment here. So we're going to determine that this present value is less than the 90% here of the fair market value, and that means it's going to fail the test because it has to be greater than the present value of this minimum lease payments has to either be greater than or equal to 90% here of the fair market value of the leased asset. So first here, we could look at it in these terms where the $100,389, those present value minimum lease payments is less than the $108,000, the 90% here of the fair market value. Or we can look at it here where we have the $100,389 here, present value of the lease payments, divided by the fair market value here of $120,000, and that would equal 83.7%, which is less than the 90% hurdle rate here for the test, so therefore it fails the test. So we have now not passed any of those 4 tests here, so that means here we're classified as an operating lease here. So these 4 tests that we looked at here, the transfer of ownership, this bargain purchase option, the lease term greater than 75% of the economic life, and the present value of the lease payments here has to be greater than 90% of the fair value. These are the 4 test criteria that you would be using here for the lessee when you're determining if it's a capital lease or an operating lease. And if we can answer yes to any one of these 4 tests here, any one or more of those 4 tests, it would be classified as a capital lease here for the lessee. Otherwise, it would be classified here as an operating lease if you fail all of these tests. And again, if the lease fails all of the tests for the lessee, for the criteria for determining whether it's a capital lease here, then it would be again classified here as an operating lease. And for example here, we're going to, both the lessee and the lessor are going to be using this as an operating lease here. But we went through it here from the lessee's perspective.